Hey everybody, good morning. How's it going? What's going on? Welcome to the stream. Michael, Larry, Donald, George, Craig, Francois, Rob, Ted, Dan, Rex, Sergio, Eric, Zub, JB, Indy, Wade, Terrence, Pat, Cliff, Kenneth. If you want to chat with me like all the fine folks saying, hey, good morning, all you got to do, click the button over here, be a subscriber on the channel, and a few seconds later, you can chat while I am live. If I'm no longer live, you'll have to leave a comment down below if you want to talk to me, or come join me in Discord, which the link is in the description. You just click the more button down there below, expand it out. It does cost like $5, so, I mean, maybe that's not for everybody. That's why you can leave a comment down below. And Kimberly is here, my favorite subscriber. And Tinright, glad to see you. Don't recognize your name, but welcome to the stream. Welcome to the crew. Welcome to the jungle. And how's everybody doing? Pretty good? I mean, it is yet another day in a long series of days. And I brought something. Threw a bunch of alerts in here. So we have phantom debt. Possibly upwards of $700 million worth of phantom debt. And what is that? You might say, you're like, JT, what is this phantom debt you speak of? Well, look right here. We just had a new record on total credit card debt versus savings, right? Personal savings in green, farting around here at all-time lows. The credit card debt, revolving debt, hitting $1.3 trillion, 1.33, and that's pretty ridiculous, if you ask me, but it's not the full story. Did you know that buy now, pay later is not tracked in any way in the economy? They're estimating that could be 700 million, possibly 700 billion. I don't know. I don't know that's 700 billion yet, but it is floating out there. So let's do this really quickly. Pull this over, and I got to get my other chart that I left off of here. Right here, look at this. Here's what we actually track, all right? U.S. consumers have $17.5 trillion right there. That's as of Q4, so probably got more now. Mortgage, the biggest piece of this. It's like the most expensive thing we ever buy, right? As homeowners, as people, we always aspire to own a home. It's the biggest piece of debt. Revolving debt, in there. Auto loans, another big chunk in there. Credit card debt, another big chunk in there. Student loan debt, a bigger chunk in there, bigger than cars or credit cards. Kind of crazy. And then other debt sitting up there on the top, the icing on the cake, other debt. And not tracked in any of this, is buy now, pay later debt. So what is this phantom debt you speak of? It's the buy now, pay later that's ramping up. All these Affirm, companies like Affirm that do the buy now, pay later situation, PayPal carrying a bunch of it, and they don't report it necessarily. That's curious to me. There it is. Affirm Holdings right here. There's been defaults in this. And we do have the potential to explode higher here, but I don't know. Don't look too good. This was hot and heavy back here. Exploding higher. Off the lows. Is buy now, pay later a thing that's going to keep going? Possibly. Possibly it's going to burn us down. PayPal also offering some buy now, pay later. I think, what was it? Sezzle, S-E-Z-L. I think these are buy now, pay later too. Can't remember. Yeah, paying 4. That's what I thought. It's interesting, right? Yeah, you got Synchrony Bank, you got all these new fintechs popping up, doing this stuff. And I find it very interesting. We're ramping the credit card debt at max levels, but then we don't track this phantom debt out there at the same time. Is this going to be the monster that comes up and gets us? It could be. Could be the straw that breaks the camel's back out there hiding in the shadows. I mean, look at that. Sales will make a nice pop, potentially on the way to 124. I tell you what, I mean, you got lots of them, PGY, yeah. I mean, this one doesn't look too good. Doesn't look too good. And I can't remember Synchrony. There it is, Synchrony Financial, SYF. I mean, that one, not too shabby. Nice move up. Now, when this all burns down, or if regulators step in to regulate it more like credit cards or whatever, protect consumers, watch out, baby. Of course, if they don't have credit default swaps and a lot of credit defaults, guess what happens? So this is a threat hanging out there in the markets. Now, it can have a cascading effect. It may not just be these buy now, pay laters that have a problem. All right. If they have a problem, what about banks that have traditional loans? What about the mortgages? What about the student loans? What about the car loans? What about the other debt? All right. This is yet another threat hanging out there. Is it coming apart today? Probably not. Coming apart tomorrow? Probably not. It's one of those things to keep in the back of your mind, though. And all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell any financial instrument. If you desire personal financial advice, you got to hire and consult a financial advisor. All right, that's don't buy stocks, don't buy options, don't buy Forex, don't buy futures, don't buy cryptos, don't buy treasuries, don't buy bonds, don't long them, don't short them, don't trade them. There's a substantial risk of loss. Like that's the deal. All right. Moving on. This week, pretty benign. Like we're on the last day of the week and not much happening here. We're wrapping it up. Yeah, we saw some overnight action, a little bit positive. Positive on gold, positive on Bitcoin, positive on the equities, just general indexes. And as we come into the U.S. Open, we're giving that back just a hair. Next week, we have CPI, PPI, and CPI might come in a little crazy. It might come in a little hot, a little hotter than what we've been estimating. All right, may come in, and that PPI is coming in too. So we may see, they're kind of estimating we dropped to 3.4 as the forecast. This may come in higher than what we've seen. This may actually have gone through the trough and be on its way back up again. Typically, when we get inflation, it happens in waves. All right. Happens in 2 big waves because this first wave usually catches a bunch of companies off guard. All right. Things get more expensive to produce and sell very quickly, and it catches people off guard. And the way that business writes contracts, they write it for a year in advance. So you can't just go, oh, crap, we didn't account for the increases in prices, and we need to get more money from our suppliers, or things like that. That the suppliers, we need to get more money from our customers. You can't just do that. So when you have contracts written far ahead, so this usually rolls into the next cycle, and it usually happens in 2 big waves. So we may be about to embark on the second price wave, and the second price wave could be bigger. And usually big inflation, which is kind of what we got, big economy-wide inflation, usually happens in 3 big waves. So right now we're kind of in the second act where we're kind of getting this lull, and we may experience some price hikes, and then we may explode higher into the third act. And I probably don't have the chart where I can quickly pull it up. Let's see if I do. Yeah, here it is. I do. I was smart enough to pin this right to the top. Look at this right here. This may be what we experienced. Yeah, this was back when we had CPI at 7.7. We're now sitting over here in the premature all clear. And this is CPI basically starting with prices at 100, prices at 100 in May 2020. So we've already seen prices ramp up, about 20, 25, 30%. So we're sitting over here, right? We could see prices up 150% by the time we get up here. Wouldn't that be wild? Inflation, sticky inflation keeps going. And then what if we ramp again? Like, what if we actually accelerate the inflation? These 30% increases are nothing compared to the potential for 150% price increases. What if everything costs? Think about it. What things cost back in COVID? Like your gallon of milk costing, what did it used to cost? Like $3? What if it now costs $6? That's a 100% increase. What if it costs even more than that? What if it costs $7.50 for a gallon of milk? Pound of ground beef used to be like, depends on where you are, $3, $4, right? Same situation. What if it's $7.50 a pound, $8.50 a pound? And some places, ground beef is already $6 a pound. I've already seen. So this is not a universal thing here. Price of gasoline could be. We were seeing $3 now. I mean, it was like $2.50, $7 a gallon, $8 a gallon. That's where we could be heading. That's a scary story when everything could be 150%. Like the average of everything, 150% more. That's where we could be heading. So, dun dun dun. I heard everything Jeffrey said about it. Yeah. So that's phantom debt. It's hanging out there. So that's one of those things. One of those things. You gotta be careful. Dun, 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 dun. I'm just warning. Just warning. All right. All these things are kind of coming together. Now, does this burn us down this week? Probably not. Does it burn us down next week? Maybe not. So be careful out there. Just trying to bring awareness to everybody. All right. What does this matter for what we're doing? Well, let's jump into, as I said, the index is up. Yes. Pushing higher. Trying to get out of that zone, the red zone. Right up to the limit there at the 786. Now, if we turn down from here, still the same situation. If we can break and close above here today, this is kind of like a key point. Like if we can close above here today, odds are we're going to push it higher, right up to that 5,400 area. If we don't close it above here today, if we close red today, that's starting to be the initial indication we're going on down. Now, we can go on up here and still go down. So it's just makes me nervous at this point. Super nervous. All right. Same with NASDAQ, although NASDAQ hasn't even pushed out of the orange box. Tried overnight, didn't get there. It looks like I'm going to get a bunch of alerts. Invax close. And so we need to watch that. Markets open. S&P popping a little bit. Oh, there's XLE close. And Best Buy open. And EWC close. And a Shell close. So all those energy things that were popping off yesterday morning, all closing back out today. And BX closing. Beautiful. I'm getting alerts like crazy. Imagine that. So Russell, though. Russell looks a little more sketchy, I think you might say, or I might say. This thing is eerily similar to the setup we had back at COVID. And we could experience a big down, if not a really big down. There's rig closing out. So this is some cautionary stuff here. All right, we have a setup for a big drop. And unfortunately, Russell right now, if we pop higher than this high, you know, they've got a big blue arrow rolling right here. If we pop higher than that high, we set up a different pattern than a drop on Russell. So this is one of those key points, and it doesn't have clarity until we either start dropping or we break above this high. So while we're right here, no clarity on direction, although it's got a beautiful potential setup for going much lower. It could invalidate that very quickly by going higher than this point right up here. All right. I'm kind of positioned for just in case we drop out, because it could drop out fast. Something could come apart very quickly. CL, oil. Got a lot of stuff drawn on here. Probably should lighten it up just a little bit on the charts. So what do we have cooking here? We came down, pushed into that echo where the first move down and the second move down, basically at equality. Let's clean this up some more, Keep removing stuff. We already hit that. Don't need to remind ourselves. All right. We hit right down in here and we found support so far. Breaking back up. If we get above this trend line, touch something. If we get above this trend line, right in here, this trend line right there, ding, 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 then we are likely on a path to go test this prior high right here. We're going to test that, get above that, almost, not a guarantee, but almost a guarantee. We're going to go rallying right up to 90. That's a high probability setup right there. We get above that, this close right here, get above that, 70+% likely, maybe even 80% likely. We're going right on up there. And I got to change one setting to get the numbers on this chart. That was a daily roadmap bounce. Yeah, 80% on oil. 80%. We trigger this, probably going right up to that 90 area. Set your alert right there, 83.90 or 83.89, right there. Actually, 83.75 would be the trigger. We get a daily close above 83.75, shooting off. Probably not 90. Which stocks can we trade for oil? You can trade USO. You can trade if you want to go leverage. Look, same pattern. Basically, UCO. You can just buy shares of that one. That's a ultra, so it's leveraged. Would I recommend options on leverage? Absolutely not. SCO, you could, if you wanted to do options, you could do options on this one. This one's going to drop. It's ultra short. This one's going to drop. So you could, if you like to buy puts, make money when they ramp up in IV, this one might drop down to like 13, possibly much lower. It's an ultra, so it'll go extra fast, extra far, but not huge downside from 16 to 0. So UCO goes up. That's one I kind of prefer to play many times. I've already got a position in UCO. USO is just the oil fund ETF right here. Now, there's a huge variety of other stocks. There's like XLE you could play. That one didn't hit the roadmap line. That's energy sector, broader swath. So there's all sorts of things you could do. All right. I'm not saying to do any of them. It's not a recommendation to buy or sell anything. All right. Gold. Look at that baby go. If we can get above that 618 right there, we're right at it. Testing it. If we get above it, we're going right up here, 24.90. I thought yesterday I was commenting that silver was indicating we were about to ramp, and silver's about to pop pretty big. We could be on our path to 35 up here. Silver's set up really to go to 31, possibly 32. 35 is my big picture target, possibly out the next year. And it could go much higher than that. Could go up to 40, 45. That's what we're looking at right now. So gold GC hanging out right here under the zone. If we get above that, odds are we're going right up in here. Can go pretty quickly. Then the bigger targets, bigger path, 3,000. Bigger picture than that, 5,000 upside targets. Possibly we 10x gold, especially if inflation goes crazy. Think about it. Gold back in May 2020. If we were just talking about inflation here, May 2020, right in here, gold was $1,700. If we do the 150%, talking about 35 plus another 8, so $4,200 roughly, $4,300 just with inflation, not even with any kind of excitement. That's why 3,000 to 5,000 ways to play gold. GLD, GLDM, lower cost way. And there's all sorts of leverage stuff you can play. All right. I'm not gonna get into all that. You can Google gold ETFs. Now, Bitcoin over here has potential to go down, but has potential to go up. We're in a kind of a downtrend cooking slightly. Downtrend of highs keeps coming across. We haven't even tested it recently. That leaves opportunity for upside, but also potential, since we're in a downtrend, to go hit the daily roadmap line. And if you don't have the roadmap line, the link is in the description. That's what you get for $5 right down there. So, and you may be like, JT, $5 too expensive. Well, you shouldn't be trading first. Number one. Number two, that's okay. I have a video back from not this past December, but December a year ago, where I give you the code in TradingView. This is TradingView I use. The code in TradingView to have this on your chart. But anyway, you'd be like, well, how do I scan for those kind of setups? Well, that's what I charge $5 for. I give you a weekly watch list of potential tickers set up every week. So this, on the daily chart, Bitcoin spot came down pretty dang close to hitting the roadmap line, and that close may count. Often enough, close does count. It won't trigger my statistics because close isn't close enough for the statistics. It actually has to touch. So Ethereum still looks weak, even if Bitcoin's reversing here. That's still an accelerated path down. We do have the spot ETF approval for Ethereum coming up on Thursday, May 23rd. But is it going to happen? I don't know. The market doesn't seem to think so. And Ethereum's a different critter than Bitcoin. There's no supply shortage, right? If we go look at, got to go back to the default page here. If we go look at CoinMarketCap right here, CoinMarketCap, that lists 2.4 million cryptos, 763 exchanges. If we look at Bitcoin, it has a max supply. If we look at Ethereum, there's no gray bar indicating a max supply. All right, this is a fundamental difference of Ethereum from Bitcoin. There's no cap supply. There's no supply cap. They can just increase supply whenever at the whim of the whole system. Think about it. Things that have unlimited supply, right? They don't have like a supply constraint at all. What happens to the price over time? Yeah, this is just economics 101. If you have unlimited supply, doesn't matter your demand, unlimited supply, what happens to prices? Anybody? Unlimited supply drives prices toward zero. Over the long run. So that's That's a huge fundamental difference. Now, our human psychology, whatever, that creates different situations, but an unlimited supply can drive prices to zero. Now, you may be like, well, they're burning faster than they're creating right now. Yeah, right now. So right now they have a potential to go up and create a supply constraint. But in the long run, they can just decide to make more. Be careful. A lot of these coins have no supply constraint. Dogecoin probably never going to $1 million because there's no cap on this supply. It just keeps making more and more and more. 10,000 more every couple minutes. SHIB also. Look, I mean, SHIB already in the market. It's millions, billions, trillions. I mean, they just keep making more and more and more. And you can come over here and look. There's no, the max supply. It's infinite. It just keeps going up. It'll just keep going up. What do prices do on an infinite supply? So that's why I warn about Ethereum. It's a different critter than Bitcoin. All right, maybe like, well, it's got contracts and this and that and utility and yeah, that's what gives it value right now. If they take this and make it not a commodity and make it into a security, I think we'll get a knee-jerk reaction down. Gary Gensler kind of has it out for Ethereum right now, and we may see a knee-jerk dip, which may be a buying opportunity. But right now, keep your big picture plan and your small picture trades in mind. This is a bearish pattern right now. Still a bearish pattern on Bitcoin too, with the lower highs cooking. Dollar here. This is interesting. We're just consolidating right here. Not really breaking out over and not really breaking down. This has the appearance, it looks a lot like the Bitcoin chart, has the appearance that we want to reach down and tag the roadmap line. MSTR, popping on Bitcoin being up overnight. This thing really looks like it wants to come down and hit the roadmap line. If you haven't seen me compare this to Bitcoin, grab the all-time history. Look. They don't own leveraged Bitcoin, all right? There's no leverage to their Bitcoin. They just hold Bitcoin. They went shooting up while Bitcoin did not. So watch out for these two to come back together. Every time in the past they've hit, this is like gotten away, it's come back down. We have to align it to the bottom in 2022 to really see what we got cooking. So we've got MSTR going on a run, coming back down, nearly touching, going on a run, coming back down, nearly touching, going on a run, coming back down, maybe nearly touching. All right. At some point, it's going to come back together. Now, if we go back even further and look at the last big run in 2021, off the last halving event in May, lined it up in May, MSTR went up crazy, came right back down to Bitcoin. Flew together, outperformed on the downside. Right there. So big picture, since they started really going all in on Bitcoin, they're now outperforming again. Line it up on right there. See, they got a little crazy, came back with Bitcoin. Got a little crazy, came back with Bitcoin. Outperformed to the downside, outperformed a little crazy, came back to Bitcoin. A little crazy, back to Bitcoin. A lot of bit crazy, probably coming back to Bitcoin at some point in the future. All right, Bitcoin's up 400% off that low. MSTR MicroStrategy up 800%, and it just be careful. It was the biggest popper, now it's not popping. So NTRA, watch out for that to retrace. Can it go crazy higher? Sure. It's got resistance up here at these prior highs. We can go visit. ASML, a little bit of pop, kind of came down close to the roadmap line. If we can get above the 618 up here, which if we move that over, if we get above that zone, we can go higher. If we turn down to the zone, we're probably going to go on a deeper retrace. It's the long and the short of it. NVIDIA, same situation. If we turn down here, we can come down to the roadmap line, although this may be done. Like that may be all we needed on the correction. We break back up and we go on a run. The run from here, potential upsides, 1,000, 1,100, 1,250, make it the largest company in the land. Maybe like, how do you know largest company in the land? It's just some simple math on the number of shares available. And you jump over to infinite market cap right here. You look at, let me refresh, reload, refresh. Microsoft sitting at $3.08 trillion. Back up. NVIDIA sitting here at $2.28 trillion. If NVIDIA's price ramps up to about $1,250, it should put it up here. Maybe take 1,300 to actually catch and exceed Microsoft, because Microsoft will probably go up at the same time. Be a race to the top. Now, in the past, companies that have popped up to the top from being way down low, these, they did not climb slowly. They climbed very, very quickly. Companies that have climbed the ladder quickly, gotten to the top, don't tend to stay there. They tend to go right back down very quickly. Just a warning, all right? It's like Icarus flying too close to the sun, melting the wings, and plummeting to Earth. If you don't know the story, maybe you should go check it out. So, notably absent on here, MSTR, not anywhere close on this list. We go back and check it real quick. You can see their market cap is only about $22 billion right there. If Bitcoin went to, say, $100,000, their Bitcoin holding would be about $20 billion. So if you assume that half of their value, half the value of that Bitcoin was cost to acquire that Bitcoin, so they'd add $10 billion, so they'd be like 30 billion, maybe 40 billion right there. You could say, well, people may anticipate and push it even higher, so maybe they pushed it twice that, maybe $80 billion, right? Go look at this list over here. Oh, cool, ads. Love it. Where's $80 billion? Well, not in the top 100. $80 billion, $80 billion, not even barely in the top 200. So definitely not set for that company to be largest in the land. So key differences here. All right. SMCI bleeding off. That's still a pretty good downtrend. We may experience further decline. That's what it's all indicating right now. Resistance right up here at this zone where I've got the orange box drawn and big down arrow. Netflix probably on the way to the path. Set up the pattern. 661 right up there. Next target up. SG. Sweet green. No idea what these guys do. No, don't care, actually. Don't care. Right up through the targets. Off that pullback. And probably has a nice big fat resistance right there where sellers will come in if we spike that zone around 40. Invax. Nice pop. Biotech is not something I find tradable, so moving on. ITOS, nice pop, but again, biotech, not tradable. TSM, rejecting the Head and Shoulders reversal potentially here. Just remove that, breaking above. That's kind of the confirmation that we've rejected. So what does that usually mean? It means that we typically go up from there, from the neckline. So potential to go right up to the target at 168, which is what we set up when we broke above this 114 level. Path to 168. You got to be able to survive the pullbacks, but there you go. Possibly 198 above that. CRH. Weak sauce on the correction. Weak sauce. Close here indicates 91 on the upside. Coin showing some weakness. I really want to see coin drop to the roadmap line on the daily. LABU, leveraged biotechs, and not breaking out above the roadmap line indicates we're going to take a bigger downside move. That support right now comes in at 80. We're sitting at 100, and it can go down possibly to like 13. PLT, Planet Fitness, popping a little bit pre-market, but after the market's open here, not really doing a lot. Not doing much. Let me refresh my list real quick, just make sure. Yeah. ANET on the path, 325. Did the bounce. Maybe like how likely is this bounce to actually play out? 100% likely on 7 past trades, which is, a population is 30 statistic population of significance. This has 7, may or may not, this could be the one that doesn't work. I'm just throwing that out there, but 100% of the time in the past. So if you believe in things repeating like that in the market, probably going to get another $12 upside, maybe 15. Right up to that 320, 325 area. Right up there. Not too shabby. And how long does it take? Usually takes 21 days, 21 trading days, on average. So it could take longer than that, could be shorter than that, could take 2 days, could take 1 day. Just throwing that out there. Just throwing it out there. I've been working on building maybe a scanner for that kind of statistics. And maybe if that's something you might be interested in, let me know in the chat. I already have some live alerts for my Term Trading Labs group that work on that system. CEG just ramping even higher. There's another energy potential. Now remember, energy producers are not oil. So while they may experience the same sort of move, they may not. All right, there's lots of things happening in energy. Just because like oil goes higher doesn't mean like XOM is going higher or CVX is going higher or VLO is going higher. It might not. Or, everybody's favorite right now, it seems like with Warren Buffett, Oxy, which hasn't broken above the resistance really. Like we pushed up and rejected down. This is a curious potential setup here. It's not showing strength. Now we may retrace to the roadmap line, set up something more bullish, but that's just not. It's been this long-term correction here. Ever since Warren started buying in right here, he's been buying every dip. Every dip in here, he buys more, adds to his position. Duolingo. How do you join Trader Lab? Call the number 321-888-3962. I don't have all I have is it's an interview process, so I'll throw that in the 321-888-3962 right there. Or you can message me in Discord you can private message me in Discord with your personal contact information. I will kick it over to a team member to contact you for the interview. So Duolingo, back to the roadmap line right there, rejecting the breakout. Tried once, tried twice, tried 3 times, and rejected back down. If it can hold, that might be a positive sign. 267, we'd have to break back above here. But rejecting 3 times might mean we're going on the downside. VSCO, Victoria's Secret. Still looks like a downside setup there. KOLD. Back to the roadmap line. This could, obviously it did the split right there, 2 for 1. And this thing's gonna probably go up over time because natural gas, it just kind of sits still over time. And this kind of reminds me of VIX, the relationship of VIX and SVXY. So natural gas doesn't really move I mean, we get these spikes, but we come back down kind of to the resting spot over and over and over. So KOLD, while we get these epic drops, we tend to trend up over time because of the backwardation. Yeah, reverse split, regular split. So during periods of intense natural gas going higher, we have to do reverse splits. But in times of natural gas languishing, we get regular splits. So it's an interesting dynamic. It's a little bit like gambling because it's an ultra leveraged on something like natural gas that can move. SMH potentially extending higher, 247 on the upside. NVDX, that's a leveraged 2x leverage on NVIDIA. If you think NVIDIA is going to the moon, maybe you ought to play some 2x leverage on it. We break above that 618 level, 132 on the upside. GEV, remember leverage stuff doesn't always follow the pattern. GE, Vernova, whatever, Nova, nothing. Not enough candles to do. I guess this was one of the spinoffs from GE. Yeah, that was one of the... GE broke apart in several companies, and that was one of the... Like GE Healthcare, GE Aerospace, GE Energy, I guess, whatever. Electric Power. PDD, potentially going to reach for the sky. 157 is the upside target. ARRY, downtrend, potentially going down into a blaze of glory. $9 on the downside. GH popping up, still below the roadmap line, still a bearish pattern. Be careful. That can continue right down in a blaze of glory. VST has been on the list lots of times lately, and one of these days we're going to get a retrace, but is it from here? Is it from here? Is it from ridiculously higher? I don't know. At this point, it's going to do a retrace and give us more information. Right now, that's pretty crazy. That's exponential up. Exponentials up. Almost always end in a big decline. I'm just warning you. There is another pharmaceutical, biotech, getting slammed right down to the lows. Watch out. That can go even lower. AK, AM, Akame. These guys run data centers, and you would think that was pretty hot right now, but obviously something's going on. Losing business to other cloud providers, I guess. That low, that high. This could set this up for mega move up in the 150 area. Could. Has to get going, has to get back above that roadmap line. Right up in here, this resistance. Got to get above that to go up here. Yeah, it makes sense when I say it, right? If we break down below this zone, could be heading down to the 55 area, though. Definitely a coin flip zone. This is why you don't just buy now. It's got to hold here, turn back higher, prove it's going higher. Otherwise you could be sitting in this. Ooh, yeah, that's like 45% downside with a potential 50% upside. Be careful. Another one firing off. AMD. PGNY. Gnarly. TM. Toyota Motors probably coming back to the roadmap line. Getting close. Getting close. If we can hold support here, we could look at a new potential move up. Gotta wait for it, though. Gotta wait. That next target up there, which would, that bounce could take us right up there to that target. Right around 260. So looking for this to actually tag. Actually, I'm slightly interested in trading this. If we can tag that, get the turn and burn, go higher. Frog. Right back down to the roadmap line. That high, that low. break back above this 43 area, could go up to 52 on the target. mRNA, not really a big downside trader most of the time, so that's why most of these are just upside targets. Looking for that extension. Google, think about it. Why don't I chase the downside much on a lot of these? So the whole premise of the market, right? Roughly 8% gains per year for like 100 years, like 8% gains a year. So on average, 8% gains a year. Why would you bet against that? Like, if the trend in the market, the general broad trend in the market for decades, a century, is up, why would you play the downside? You're stacking your odds against you. Now you can play short-term opportunities for downside, but I like to go with the market. Like if the whole market's going to turn down, that's your short-term opportunities. Like it's like Russell. Looks like we can go down quite viciously, but on the long time frame, everything's going up. So why would you bet against it? So I look for things that go up over time. It's kind of my bias for my trades, and I found that when I do that, I do a lot better. So Google potentially topping out here. That's a lower high, can result in another revisit of the roadmap line. Last time we did that was back here in March, and we did this giant pop off of that, and that got to targets right there, right up to the 1618. Beautiful. Let's come back down, do it again. We did it over here, ramp up. Did it over here, ramp up. Let's do it again, ramp up. Echoes in the market. Love it. Sony. Ooh. Breaking down. Watch out. May get below that and go on an extension down to 50. And last but not least, AAOI. Applied Optoelectronics. What a name. That company name was obviously done by some nerds right there. Not somebody with advertising savvy. Let's make it a name so hard that most people can't say it. Anyway, break back above this 618, 28 on the upside. Otherwise, we could go on down. We've got support right here at 7. All right. Bias for the day, extreme caution. This is like proof in the pudding time. Can we break higher? Do we get this close up here? And we set the stage for going higher. That's the big question in my mind. Right now, looking strong. Looking pretty strong. If we turn sour today and close down here, certainly if we close back in the red box, odds are we're probably going on down. So watch out for a sourness to appear in the market today. Be careful out there. Your couch save may be your own, right? Have a plan. Remember, it's not being wrong that costs you money. It's staying wrong. Don't stay wrong in the face of information that you did the wrong thing. All right, just close it out. Move on. Don't stay wrong. Don't be like, it's coming back. I'm going to double down. You were wrong. Don't double down. All right? Be careful out there. Be careful out there. I'll see you later. I'll see you Monday. Bye for now. Have a great day. I'll be